This real estate market is on fire right now. Homes that are currently listed for sale are receiving multiple offers, most of which are well above the asking price. Buyers are agreeing to waive the appraisal contingencies, and in some cases, they're even waiving the inspection and loan contingencies as well, which puts their earnest money deposit at risk from day one. To top it all off, housing inventory remains very low and interest rates over the last 2 months have trended up. But despite all the craziness, buyer demand remains very strong, and I still personally believe that there is an opportunity in this market to purchase a great home and to lock into incredibly low 30-year fixed rate debt. So in today's video, we are going to do our first weekly market review, and we are going to dig into the stats and facts in the Sacramento region so that you have a pulse on exactly what's going on in the real estate market. Welcome to Macro Thinker. If you are new to the channel, please consider smashing the like button to help push this content out to more people, and tap that subscribe button to see more weekly videos on finance, real estate, and investing. My name is Lewis. Let's get it. Okay, so let's jump right into the data. Up on the screen, I have a chart provided by Trends. This comes directly off the MLS, and we are looking at the Sacramento region, which for purposes of discussion today, that is going to be Sacramento, Placer, and El Dorado County. So we've combined all three counties to put this data together, and we're going to go through this chart, and it'll give us a good picture of where real estate is today. So on the right-hand side, we have the number of homes listed. On the bottom of the chart, it shows the date. So this chart goes back a little bit over a year, starting in December of 2019, and brings it to February of 2021. March data should be out next week. But what's interesting here is that the light green bar is an indication of how many homes are currently listed for sale. And then the dark green bar shows us how many homes sold. The red line shows how many homes are currently pending, or in other words, how many homes are under contract to be sold. So a few interesting things that I want to point out on this chart. If you go back to April of 2020, the homes listed for sale were over 6,000 units. And if you're looking at February's numbers, we have about a third of those homes currently listed for sale. If you look at the number of sold properties, they've actually remained relatively consistent over the last year, and they've trended up in the summer months, which is usually the peak selling season. So months like July, August, September, and October, we've saw more real estate activity. Now, the same goes for the red line, which indicates pended sales. One thing I want to point out about pending sales is they usually lag about 1 month behind the number of sold properties. So in January and February, we've seen an increased amount of pending sales, which means that we're likely going to see an increase in sold properties in March and April. As we scroll down, there's another thing I want to point out that I found interesting. We can see some percentages of what has happened over the last year. Number of homes for sale has fallen by 57.2% in 1 year. The number of sold properties has actually increased by 10.1%, and the number of pended sales has increased by 7.2%. So what's interesting here is that there are less homes that are currently for sale, but there is more activity in the market, which contributes to a higher buyer demand. Next chart on the screen is the average price per square foot, which happens to be one of my all-time favorite metrics when identifying value in the real estate market. So the price per square foot is very easy to calculate. You take the sales price of a home and you divide it by the square footage, and it gives you a number. And that number is the price that you pay per square foot. As an example, let's say you have a $450,000 purchase price, and that home is 1,595 square feet. So you take 450,000, you would divide it by 1,595, and it would give you a price per square foot of $282. Now, this chart shows exactly where the price per square foot has been over the last year. On the right-hand side, we have average price per square foot, and on the bottom, you have the timeline, same as the last chart. So back in January of 2020, the average price per square foot in the Sacramento region was $234. That has trended up consistently over the last 12 to 14 months, and we are now sitting at about $278 per square foot on average. If you look at the year-over-year change, that's about 15.6%. So next chart shows us the average amount of days on market with the orange bar, and then the green line is an indication of the sales price versus the original listing price. This chart is really nice to take a look at because it's an indication of how hot the market is and how quickly homes are actually selling. All right, so let's first start with the orange bar, which is the average amount of days on market. If we're looking at January of 2020, average days on market was 52. Now, if you're looking at January of 2021 or February of 2021, average days on market is 26, which means the time that a home spends on the MLS or on the open market has been cut in half. That means homes are selling very quickly right now. Now, the green line up at the top is an indication of the sales price versus the original listing price. For example, if a home was listed at $400,000 and sold for $400,000, that percentage would be 100. So if you're looking at this chart, you can see that if you go back to January of 2020, homes were actually selling for 96% of the original listing price. And if you're looking at today's market, in February of 2021, homes are selling for 100% of what they are being listed for. Now that is an average. Next chart is going to show us what the average price for sale is versus the average sold price. If you go back about a year to February of 2020, the average for sale price was $611,000 and the average sold price was $440,000. Fast forward to today, average list price is $822,000 and the average sale price is $535,000. So we've seen the prices move up over the last 12 months pretty substantially. Now, what you'll notice is there is a big gap between what is listed for sale and what is actually sold. That's about a $300,000 difference. It just means that there's more properties selling at that lower price point of $535,000. Because in general, some of those higher priced homes, they take longer to sell and they don't move as many units. That's why there is that big gap. Now, if you're looking at the average sold price, which I think is interesting, we're at about an 18.9% increase in a 1-year period. That is a massive amount of appreciation in 12 months. Now, last but not least, this is another one of my favorite metrics because it kind of determines what sort of market we're in. Like, are we in a buyer's market? Is it more neutral or is it a seller's market? And so what we have up on the screen is the month's worth of inventory that is currently available for sale. And the way this works is very simple. If there is 2 months worth of inventory on the MLS and no other homes hit the market for sale, it will take 2 months to sell everything that is currently listed. That's the way it's measured. So up on the screen, on the right-hand side, it shows months worth of inventory, and on the bottom, it shows the timeline. And you can see that inventory today is sitting at under 1 month supply. We are currently at 0.8, which is very, very low. If you go back just less than a year ago to April or May, we had 2.2 months worth of inventory, and that still is historically very, very low. To give you an idea on how to measure inventory, generally speaking, if you have 3 months worth of inventory or less, you are in what's called a seller's market, meaning the sellers kind of drive the bus. They determine the terms. They have more control in the transaction because there is a large buyer demand and there's less sellers. If you have 3 to 6 months worth of inventory, usually that's more of a neutral market where it's sort of a little bit more evenly placed. and maybe homes take a little longer to sell, but buyers and sellers can usually work out and negotiate a deal. Once you have 6 months of inventory or higher, you would be in what we call a buyer's market, where there are more homes available for sale than there are buyers, and then buyers can get a little bit more aggressive with their offer in terms of the purchase price and maybe some of the negotiations back and forth regarding terms and contingencies and things like that. If you're looking at the percentage drop in a 1-year period, we have 60% less inventory today than we did in the same quarter 1 year ago. That is a massive reduction in inventory, and I think some of that could be attributed to the uncertainty in the market. All right, so that is going to wrap it up for today's weekly market review. We covered the Sacramento region, which included Sacramento, Placer, and El Dorado County. But I would like to start adapting and tailoring this information towards what you as the viewer want to see. So if you want to see a specific county in the Sacramento region, let me know below. We can identify it and hone in specifically on that one. If there's something else you would like me to add to this or something you would like me to revise, leave me a comment below. And if you're new to the channel and you haven't done so already, please smash the like button to help push this information to more people, and tap the subscribe button to see more weekly videos on finance, real estate, and investing. Thank you again so much for watching. You have a great day. Take care.